Good morning. Welcome back to another pipeline trading video. So I'm going to go into a little bit more depth. I had some questions yesterday come my way that I wanted to give some clarity on, and maybe that was my mistake. So I am not calling right now that the bottom is in, to be clear. I'm saying the bottom, and that's why I stopped putting my balls on the line, the bottom is closer to this area than people think. We have to watch price action from these levels over here. The measured move I have is this yellow line for anybody who is confused with what I was saying. 53,802. Okay. Now I want to see how we build. If we start building like this and we're not building another bear flag, if we start building another bear flag here, then we could go lower. So keep that in mind. I'm calling based off of past cycles, based off of key levels where I believe the market will bottom. So are we there yet? I don't know. We need confirmation. How do we get confirmation? We watch price action and we watch the moving averages. When the 10 crosses a 20, the price is above the 50, we know that we can go. So if you look back here, right, this is a nasty dump. But if I connect the lines, we should be closer to that level. Now, if something, and again, this is something about the markets that nobody takes into account. I can't say 100% with 100% certainty that something bigger can't happen, because if AI or something catastrophic happens in the world or in the news, which nobody can see, then this could be it. Like we could go all the way down to these levels, right? 26,000. We could go to 42,000. These are all things that we can do, but we shouldn't go that low considering where we are in the overall markets, the run that we had, the previous high back here. Theoretically, it should be 20% lower than here, that we should have this as a new floor, right? Theoretically, we're going to have to watch and keep a close eye on that. So if I confuse anybody with that video yesterday, my apologies. I think that this is a key zone where I would start to look to be a buyer. And again, this is not financial advice. This is my opinion. And I don't believe you're ever going to call the bottom perfectly. That's impossible. And what you'd want to do if you are interested in investing in these sectors is you would start to build a position. You don't go all in. You take a little bit here, maybe get a little bit down here, or you wait for the confirmation to start going in, and then you average up. That is another thing that a lot of professionals do, because you actually make more money. To give you an example, let's say you didn't buy here, okay? And you bought here, and you bought here, and you bought here, and you bought here. You would make more money this way than if you were to buy here, here, and here. This section would make money, but this section wouldn't break even till you got here anyway. This section here wouldn't break even till you got here. So I hope that makes sense. You could average down, but really look how long you're waiting to break even. So the question is that best for your investment strategy? The answer would be no. So I'm going to explain that again. If I bought right here at 41,000 and I bought here at 25,000 and I bought some here at 16,000, this tranche would be good because you'd make money here. This section here that you could have waited to buy for confirmation, you'd be better off because right here you're holding. If you were to buy here, it doesn't show. You're basically holding from June to June. You would be waiting almost an entire year to break even. So think about that. You could have waited or shorted or done whatever you're going to do, and then you could have started buying on confirmation because you'd actually start making way more money and quicker and sooner. And then you could sell covered calls. You could do all sorts of things to generate income in the middle there. So now let's see what price action does. If we go to ETH, it hit my target. We're in the first level of support. The measured move brings it down to about 1385. Are we going to get that low? I don't know. The reason why I picked this level is very simple. It connects to these levels right here. Okay. So let's see. This is a 3-day candle, by the way. This is not a daily candle. And if I go to the daily, we broke structure. Okay. But look, we're in extreme fear. So I'm expecting a good bounce here. And this, if anybody knows Wyckoff, and you look at the volume, and mark my words, let's see what today does. I think there's going to be a lot of buyers that are going to bring the prices probably up to the 1920 area. And maybe I'm wrong, but if you look here in February when we got into extreme fear, boom, it started to rally. I'm expecting some sort of a bounce. And if you go back here in April of 25, we had extreme fear. This was at 32. Today we're at 1921. If you go back here in 24, extreme fear. So I don't see much more downside. Could I be wrong? Sure, absolutely. That's what makes the markets a beautiful thing, right? Everybody has a different strategy, and the smart money mostly sees the same thing. So we're going to see. Are you going to be a sheep and fearful and start selling at the absolute worst time? Or are you going to buckle up, put your big boy pants on, and wait for this to bounce back? Because that's ultimately what will happen. Is it's not going to stay at these levels forever. And we're going to have to keep a close eye on it. And this is why I said in a few videos back, the bottom is never obvious. Anybody that says, I'm going to wait for this level, and I heard that in the last cycle when Bitcoin was at 15, 16, 17,000. I said, this is probably it. That was the ceiling of the last high. That should turn into the floor. Everybody's like, no. And I'm talking people I know that are managing over 150 million. And they're like, no, I have a bag waiting to buy this at 9,000 Bitcoin. Never happened. So they're actually better off. You don't have to put a huge percentage, but you could still have 1 to 2% exposure. There's nothing wrong with that. So let's see. I actually started to accumulate some more BMNR down here at these levels. And one of the other reasons why I'm looking for a good bounce today, for example, is I'm looking at the max pain. So the max pain on BMNR is about $19.50. Do we get that high? I don't know, but we're going to find out. I think that we can get above 1850s area, and that's where you're going to see most of the options expire worthless, both on the call side and put side. And it doesn't always work out perfectly. Sometimes there's a dollar variance, but I think that maybe we're going to fill this gap. If we gap down 5%, I think we're going to have aggressive buying to the upside. You can see that we're in this channel going down. And I think that this is one, if I were to draw a fib line, because this would be considered an impulsive move, right? Look at where we are, the 0.88, 1691, right? So this could be wave 1, 2, and then we go for wave 3, 4, 5 up here somewhere. So keep an eye on that today. We'll see if I'm right or if I'm wrong. So as always, guys, stay disciplined, trade with intention, and God bless you all. And hope you have a great day.